I would like to talk to you today about a piece of penal legislation directed at residential buy-to-let landlords. From April 2017, interest will no longer be deductible in calculating the profits from rentals, but in its place will be a tax reducer calculated as 20% of the interest paid. There are three main areas that are not affected by the new legislation. But remember that furnished holiday lettings come with certain qualifications that have to be met in order to get the favourable tax treatment. So let's look at a simple example where somebody has a salary of $40,000 a year and has invested in a couple of buy-to-lets with rent received of $20,000 and interest of $15,000. In the current tax year, they have total income of $45,000, less their personal allowances, leaves them with a tax liability for the year of £6,880. Now let's look at the same tax year as if the new rules were already in force, and you'll see that the total tax for the year has now risen to £10,403. The additional tax under the new legislation is £3,523, which is the additional tax on the rent, on which £1,000 has already been paid under the old method. So if you work out the rate of tax on the rental profits, this now comes to over 90%, and we have seen other examples well over 100%. But there is worse to come, especially if they are in receipt of child benefits. Their income is now in excess of $50,000. And the child benefit will be clawed back 100% in this year. So what is to be done? Here are a few suggestions. I think the commonest solutions will either be a consolidation of portfolios to reduce the level of borrowing, or incorporation. Incorporation has its own problems. Lenders don't like lending to limited companies, and there's always the question of capital gains tax, and now the land and buildings transaction tax. The new rules are being phased in over a number of years, so you will see that it starts with 100% interest deductible and ends up with 100% as a tax reducer. So whatever you do, you can't do nothing. You need to at least assess the impact on your own particular portfolio and decide on the way forward in your particular situation. If this affects you, then get in touch so that we can look at the options available to you and chart the best course of action to minimise your tax. And don't forget to send us your feedback. It is important to us and helps us to improve our service. I'm Alan Long from the Long Partnership, slaying your tax dragons and making your life less taxing.